Any questions so far? What about the rejection of DR at 1050? So that everybody sees it, 1050, that's the candle here. That was the question. So this one candle, and the question was, why not trading this one directly? So now we go into DR lens and checking why we should not trade it. So we know that the median extension is minus 0.3. First of all, we have literally the lowest distribution number except the other levels out here, but that's the lowest one inside the distribution. And the second one is, when you look at the time, would you expect, like, our median time of max extension is 135, right? So would you expect really that we go directly down when you're looking at the distribution tables? I'm switching back to the chart to visualize it. So DR lens is giving you this and this and this. But what you're going to learn is to understand how to use the data efficiently. Like time argument. So we are talking about time, price. And the time argument for this one is very important, because I don't see any case on the data I was going through today. Yeah, but of course it's inside the DR, yes. So it doesn't make sense to just look at one point and say, okay, I'm going for this point, right? I mean, we have a volume imbalance over here, right? Everybody sees that. So I know not everybody has the drip skip, but like also if you would have it and if you would do your homework, you would see this area up here. So what is the blue area? Is a gap imbalance. So what is a gap imbalance does? It should work as a what? Who gives me? Blue, gap, barrier, correct. No trespass, no magnet is volume imbalance. Right, resistance, no trespass, barrier, exactly. So if you look at now what we are doing here, we are coming down with these candles, and then you look at your data, you have your confirmation, which is the area you would expect, because this is a magnet. So no matter what I'm doing here after the confirmation, I would expect price at least to take this volume imbalance. And then I would check, is in this area where the volume imbalance is, which is 0.2, is there really a level where I have a distribution cluster? But anyway, whenever you take a trade in between here, let's say you're taking the volume imbalance, even though the candle doesn't give you something. But let's say you go short over here. Where would be your stop? Your stop has to be 2 ticks above the midline, because that's the only place where you would do it. And this rejection, like somebody, I turn off the drip again. So this rejection somebody talked about. But also this rejection, where do you put your stop loss when you trade this? Somebody's answering me, okay, I'll put my stop 2 ticks above this volume imbalance over here. I draw it out now. So what does it make sense to put your stop 2 ticks above this? It doesn't make sense to have your stop over here, because let's go back to DR lens. So DR lens is telling us this distribution. We definitely have an area between here. You can see like this is all equally distributed. So between 0.5 to 0.1, so 0.1 to 0.5, this is like quite equally distributed, right? So it can be, the retracement, when we go back to our chart, can be anywhere between 0.1 and 0.5. So if you look just at this data, and I'm not talking about time right now. So if you just look at these 2 data points, there is no, like if you take a trade here from this rejection from the 0.1 level, and you have your stop up here, 2 ticks above the volume imbalance, then you're opting in for a trade where you have to use 2R. That's more my trading style if I want to trade that. You're taking this trade, but you know, based on data, you're going to get stopped out and you have to re-enter somewhere around here. So you can take this trade, like let's say we are here and you take this trade, yeah, because you're saying, okay, we are going back to lens, so this is the level where the standard distribution starts, around here, 0.1. And if you go on the graphic, you see what it's covering. So that's the minimum retracement we want to see. So of course, you can take the trade here because there is some nice rejection. The body closes are respecting the 0.1 level. And if you take a trade here and you go aggressive with your stop, then you know like how you have to behave as a trader is simply accepting that you can get stopped out here and knowing exactly already now that when you get stopped out that you most likely have to re-enter here. So in your head, when you trade this trade, you need to know that you have to take a second trade, because the probability is there that you get stopped out. And on the other side, if you take this trade and it's working out, you have a better risk-reward ratio. But for now, if you take this trade already, you have to put your stop over here. So your trade would look like this. Let's say you enter here, your stop would be up here, right? and then you go to the max extension, let's say 1, for example, would be still okay to trade. So, and if you have your stop over here, then you lose 1 hour here, but you have to re-enter up here, which is also okay. But I think for the majority of the people here, it's better if you take this trade to have your stop up here. But the main point, I think everybody understands now what I mean. So volume imbalance, price is here, you see this volume imbalance, you know we are retracing now. So taking this trade is okay, but put your stop over here. Or if you put your stop really close, but then it doesn't make sense above the volume imbalance. It's just like, it's like, I want to be a skydiver, but I'm afraid to jump out of the window. Because like if I take a trade over here, I'm most likely going really aggressive and take a short right here with stop just above the high. So if it works out, I make my whatever, 10R. Because the likelihood that price will retrace back into the volume imbalance and just goes 2 ticks above with a wick is quite high, because this volume imbalance was not touched yet, so it's like a magnet. It's almost, you know, almost in 80% of the cases when you see this price action that we will go above here and take it out.